Hello, good day, guys. My name is Nick, technical analyst with SuperForex, and today we'll be looking at the analysis on the currency pair USD. And first, as usual, we'll be talking about fundamental analysis. Then we move right down to technicals, which is purely what we're going to be seeing in the chart. Now we have seen that USD is attracting some buyers below the 0.900 barrier, while Fed Powell's barrier speech, Swiss trade data is being eyed, and USD gains momentum around 0.8993, following a rise of US Treasury bond yields at a firmer USD. Now, the Fed Beige Book update showed that the US economic outlook had little to no change between September and early October. And this escalating tension in the Middle East might lift the Swiss franc a bit, while investors will monitor Fed Powell's speech with Swiss trade data on Thursday today. Now, the USD pair posted modest gains below 0.9000 psychological mark during the Asian session on Thursday, and the recovery of the pair is supported by a rise in US Treasury yields and a firmer US dollar. Meanwhile, the United States dollar index surges to 106.63, while US Treasury yields edge a bit higher, with a 10-year Treasury yield climbing to 4.965%, the highest level since 2007, and the 2-year Treasury yield staying at 5.251%. And on Wednesday yesterday, we saw that Federal Reserve officials affirmed their stance to maintain interest rates. And at this current level, the Fed Governor Christopher Waller has stated that it's too early to tell. It's more policy rate action is needed, while adding that the central bank can make a decision on policy path depending on the data. While Fed Bank of New York John Williams said the central bank needs restrictive monetary policy for a while to cool inflation, these comments lift the US bond yield higher and robust momentum in the US growth. While US buildings permits fell to 1.475 M in September, above the estimated 1.45 M, while housing stats rose to 1.35 million, below the market consensus of 1.38 million, with a lot of data published by the US Census Bureau, which showed yesterday that additionally the Fed Beige Book update has showed that the US economic outlook has a little to no change between September and early October, and data might not convince the FOMC to abandon its current guidance. Well, on a technical level, we saw that last week the Swiss producer and import prices fell 1.0% yearly on yearly in September from the previous reading of a 0.8% drop. On a monthly daily basis, the figures has dropped 0.1% versus 0.8% drop prior, and traders will monitor the US jobless claims, the Philly Fed index, and of course the existing home sales due later today. And all eyes will focus on the Fed chair, Jerome Powell's speech in the North American session. If Powell delivers more hawkish comments on the policy outlook, the US dollar might attract some buyers, and this of course might skyrocket to the top. Also, the Swiss trade data for September will be released today, Thursday, and this event will give a clear direction for the USD pair. And how we first of all notice that we have a total daily change of 0.03%, a little bit, and today's daily change overall 0.03%, and the last price seen was 0.8992. So with all this said and done, we have our TP set out for the most recent resistance at 0.90470, having our stop loss at 0.89613, and an estimated 40 to 50 pips thereabout, of course, good money. And that's our technical analysis on today's currency pair USD. Now let's see you in the stock markets. Hello, welcome back, guys. And on today's indices, we're having a look at France 40, FCH 40. And first of all, we have been noticing that our European markets in the red at mid-session since Wednesday, while investors are closely watching macro data on indices like CAC 40, the DAX, IBEX 35, and now also the FCH 40. But it's looking a bit different with this one because it's slowly recovering and a breakout of a recent resistance zone. And it's just so early in the morning, and we are looking out for new zones following the bullish outlook. And we are heading up to 7291.1. And this is probably where it's going to have a halt before we know the next direction of where the indices is going to be headed. So if you were to make an entry at this point and let your trade run up to 7285 axis, you're looking at nothing less than 45 to 50 pips from that point, of course, which is good money. And that's our technical analysis on today's indices, France 40. I remain your host, Nick. Bye for now.